Good morning to all traders and welcome to yet another Market Insights video. Today is Thursday, the 18th of February. A very good session yesterday for the US dollar continues with its recent gains, extending its recent gains. And of course, there is a number of reasons for that. First and foremost, we've got the retail sales yesterday out, and they seem to suggest that month to month and also year on year as well, we've got very good figures. And that is suggesting now that the stimulus passed by Trump last year is really allowing people to go out and shop. Okay, these checks that, what was it, like $600 or so, it's helping. So you can anticipate now what a 2,000 check is going to do in retail sales going forward. If of course the package comes in, it will come in one way or the other. It might be 1.9 trillion, it might be 1 trillion, 1.5 maximum, I would say. Now, yesterday also the meetings of the FOMC meeting revealed that the Fed officials foresee indeed an upward pressure on inflation, and that is probably likely to come sooner than expected. Okay. That was due to fiscal stimulus, the rollout of vaccines, and also ease in lockdown measures. However, the committee expects no substantial progress, as they said, until achieving, of course, the committee's twin goals of employment and price stability. So until we get there, there's not going to be a tapering, okay, and there's not going probably to be a change in the monetary policy, which is interest rates, okay? But they did say that inflation is building up. Now, contrary, there were other members that they said that they expect vaccine supply and also distribution issues, concerns associated with the new strain, and also resistance from the public to actually receive the injection, posing downside risks at the same time. So if you ask me, going forward in the medium and long term, this is a mixed bag, and we're going to see a lot of debates actually, even in the committee. But certainly for the short term, this is considered as a somewhat hawkish minutes report. Okay, so that's the reason we've seen actually the dollar peaking once again. So I thought it's a very good opportunity today to have a quick look on dollar against the Swiss franc, because we haven't had a look for it for like weeks now. I'm going to, of course, look quickly on euro dollar, and then Aussie also against the dollar, as we've also received a quite bad employment report, I would say, overnight. Okay, so now without looking into any further details on the fundamentals, let's just jump on dollar against the Swiss franc. This is wave 3. This is wave 4, and I'm expecting wave 5 in primary degree. All this move on the downside, all of it, is an ending diagonal. So we've got corrective waves in all the internal structures. This is another one, and I'm waiting for C to end. This is the last C. So I've got a minor degree over here, impulse on the downside with wave 1, 2, 3, and more likely 4 also done. Okay. Because we did the 61.8 Fibonacci retracement of this move so far, okay? Now, we've got 1, 2, 3, 4, and 5, an A, B, and a C, okay? It's possible that this is going to turn as an ending diagonal. I will tell you why. Because wave 1 and wave, the correction over here already interacted with one another. So it's not an impulse. So we'll be expecting that to turn into an ending diagonal. Or there is also potential, that wave 4 is not in yet, okay? And that means that this would be some sort of, an ABC. Then this will be like another ABC over here. And then we're going to get another ABC for wave 4, because we still have space to move up to 0.90 in order for us to still remain impulsive on the downside. However, I'm not really a fan of this opportunity, because we do get signals on both, not on the RSI as much, but on MACD at least, a much better signal on momentum that we are looking more bearish than we do bullish. Okay. On euro dollar, I left this as we left it yesterday, simply because I want to show you that what this penetration means back within this sort of area, it means that most likely we're going to head for the second scenario we discussed yesterday. We saw the first scenario, which is an upside move over here. We're expecting a rejection at this trend line. However, then we said that in case we break lower, it's most likely going to mean that this is going to be a W, X, and Y instead. Okay. Now, we also said that this is the minimum or the lowest we expect prices to go to 119.20 or so. Okay, so there is from the 50 down to 23 or something, there is like 25 pips to take still. Okay, and market probably looks like it really wants to get that to get these pips and then move all the way up for wave 5. Do not forget, we also mentioned that in case we do break below the 119.20, it doesn't necessarily mean we're not going to move up. It just means that it's going to be not an impulse, okay? But however, it can be a motive wave on the upside. And that's for the euro dollar. And now for also the Aussie, we talked about this a few weeks ago. We're expecting for another move over here, to be honest. Yeah, because we wanted to get this double bottom in. That didn't happen, which means now I'm looking at this correction in 4 as ended down at 0.7556. And that to me looks like a nice impulse on the upside with wave 1 and 2 done. And I'm expecting minor wave 3 to finish, and then we're going to get 4 and 5. And why I don't see this as 3 and this as 4 and this as 5 is a simple reason, because this multi-structure over here indicates that there is another internal wave over here, okay? And that internal wave over in that scenario, of course, yes, it's where wave 3 is or should be. So here's where I'm looking for this particular scenario, because there's 2 scenarios for that. Let's just call them sub-scenarios, right? One is that we've got a ended diagonal and 3 ended here. We're going to get, wave 4 done and then wave 5. Yeah. The other one is that this is part of 1, 2, 3, 4, a triangle of the internal structure. Is 4, and that's going to be internal 5 and 3. Then we're going to get 4 and then 5. Yeah. Or it could be a case, guys, where this is going to continue higher and be an extended triangle, because triangles are not necessarily got like 5 waves. There's triangles that have 7 waves or 9 waves, the extended triangles. So it could be a case where this is going to be an ended diagonal like 1, 2, 3, 4, and 5, and then this is where we're going to end wave 3. Then we're going to get 4 and 5. Yeah. So in either case, I'm looking for a confirmation, yes, above that 78.20. That is going to indicate that the 5th wave might be in already, if it's not the 3rd. So right here, we can either expect a correction in 4, or in case 3 ended here, this can be expected to be the end of this impulsive upside, and then we are going to reverse all the way down. Okay, so I hope this video was helpful. If you like, click the like buttons. It would be appreciated. If you have an alternative scenario in mind, do not hesitate to comment. I will get back to you as soon as I can. Enjoy the trade session, and we'll speak again tomorrow.